Hey, folks, my guest today is Aayush Kumar. He's a software engineer by heart with a deep passion for building products for developers all around the world. He's now building opslift.com, which simplifies operational complexities for cloud management. Aayush, are you ready to take us to the top?
Yep, absolutely. Hey, thanks, Nathan, for inviting me to the podcast. Wonderful to be here. Yeah.
What does cloud management mean? Is that like keeping my AWS spend low or setting up, my servers in the most operationally efficient way, or what's it mean?
Yeah, I think cloud management in general to me really means around that, given that more and more organizations in current days are like really, running every piece of their workload upon the cloud, right? So as and when basically the organization kind of like really hits a certain size and scale, right? The cloud footprint like really grows like on a massive levels per se. There are like hundreds of machines being running, and in fact, thousands in some cases. There are like huge amounts of data that is kind of being stored, etc., etc. So the overall, I would say, requirement of managing this entire infrastructure and keeping it stable, and also at the same point in time ensuring that all of your applications are running at the lowest amount of cost being possible also, right? So all that requires like a huge amount of time and effort for engineers on a day-to-day basis, right? And that's where I would say the complexity part of the management of the cloud operations like really comes about, wherein engineers in today's date like really find it time consuming and hard to like really solve the problems around managing this entire cloud infrastructure at
Understood.
scale. So
And
that's what
so,
something that we do.
and so help me understand how you price this. What are customers paying on average per month to use your technology?
Yeah, I think we typically sell into the category of the customers which are who are spending above, I would say, in the bracket of, I would say, $2 to $10 million annually on the cloud, right? So our price point usually like ranges somewhere between $20,000 to $100,000 annual. Yeah.
Sorry, 20 to 100,000?
Yeah.
And what would you say a sweet spot is? Like, is 40 or 50,000 bucks a year appropriate, or is that too low?
I think our sweet spot typically should range around, I would say, 30 to 40K per month. Sorry, per
Okay.
year. Yeah.
And is it a flat fee, or do you only get paid if they save money on their cloud spend?
No, I think it's a mix of both. I think ours is a usage-based pricing, wherein the more and more basically customers use our platform to like really analyze more and more resource. So our pricing is majorly focused around the resource based pricing, right?
Measured by
It's
what? So
not
you say
typically.
utility. What kind of utility? How do you measure it?
Yeah. So our utility measurement criteria typically revolves around the two factors. First is basically how much of the, I would say, savings potential are we able to like really generate for the customers, right? So I think, let's say if you say that we're able to generate like 100,000 per month, right? So that's one criteria that we generate. And then secondly, I would say on the basis of the utility that how much of the number of resources that we are basically able to like analyze and produce opportunities against the people for. So I think that's a two criteria that you can.
So what would like one resource be? Like one server? What do you mean number of resources?
Yeah. So the number of resources here, as you like rightly mentioned, it would be either a one server, or is it like, let's say, a storage device that you kind of really subscribe on the cloud, like an IP address, etc., etc. So all I would say the constructs that like infrastructure as service by default like really offers to you, right? That would be a resource.
I see. Okay, put this all on a timeline for me, Ayush. When did you launch the business?
I think we launched our business full time in December 2020. I think it's been roughly around, you can say, 15 to 18 months for us running this business, right? So yeah, that's where we launched. Yeah.
Do you remember when you landed your first paid customer, or are you guys still pre-revenue?
I think we landed our first customer somewhere, I think around in February 2020, if I could remember correctly, right? Within the 2 months. So we were bootstrapped, I think, in the first year of our business, right? So our only source of money was basically from our customers. So yeah, I think that's when we landed up our first customer.
Oh, what's going on there, YouTube? Good to see you guys. Now imagine this. You love watching these interviews with SaaS founders, but imagine if we took all of the valuation data out from over 2,807 interviews I've done manually. Saves you a lot of time. Well, we've done this. We've built it into the beautiful interface inside of FounderPath. Check this out. I'll show you how you can access this in a second, but you log in, you connect your Stripe account, you see your valuation real time, you can see what it changed over the past 88 days, and even set goals for valuation this year. Now, the secret to valuation is there's many different ways to value a SaaS business. So the reason you're going to see 3 or 4 different valuations inside of your FounderPath dashboard, this is all free by the way, is because depending on who's doing the buying of your SaaS company, you're going to get a different valuation. A VC is going to pay a different valuation. Private equity firm is different. If you're going to do a minority sale, that's different. And if you sell the whole business, that's a different valuation. You can see all those when I hover over here. Right. So the teal is what a VC would pay. Yellow is what private equity. And red is if you sold the whole thing outright. Now, what's cool about this is not built off random data. Again, you guys hear these interviews on YouTube. All these data are built from real-time valuation data points founders share with us on the show. So traction, 1.2 million, seed round, 3.7 raise. They sold 22% of their business. Go in here and filter by the event. Maybe you only want to see companies that have sold the whole business. Well, here are a bunch that have been acquired, the valuation and the multiple. Maybe you're going out right now and you're raising your seed round. Well, go in here and look at all this recent seed deals that went down, what they raised, what valuation they raised at, and what percent that they sold. There's never been a larger data set of SaaS valuations than what you can get now inside of FounderPath, and we're thrilled to bring it to you. All right, we're going to go back to the YouTube video here in a second, but if you want to check this tool out, if you want to jump in and sign up, you can check it out for free to get your valuation at this link, founderpath.com/products/valuations. Or if you go to founderpath.com and hover over products, click on get your valuation here and go ahead and sign up to give it a whirl. Again, all that valuation data live right inside the platform. I hope to see you there. All right, let's jump back into the interview. Now, are you still bootstrapped or have you raised?
We have raised, I think, capital in this year itself. I think we raised, I think, about $500,000 so far. Yeah.
Okay, so you raised $500,000 this year and called a pre-seed round. Was that like family and friends or an investor?
I think it was a mix of, I would say, family and friends plus like some notable Indian investors across India and the US, right? So that was basically the pre-seed round consisted of.
I see. And most people are selling, 10 to 20% of their business in their seed round. Were you sort of in that same range?
Sorry, I didn't follow you on this question, Nathan.
Most people, so you raised 500 grand, you sold equity. Most people are selling 10 to 20% of their equity in their pre-seed round. Did you sell about the same amount?
I think ours was like quite less in that sense because I think we were already generating a significant revenue, like before we raised out basically a seed, like pre-seed round, right? So I think I definitely can't disclose out the number of equity that we kind of like really sold, but I think it was much lower than to what basically like to typically what we see companies selling out in the pre-seed round. Yeah.
Okay, so I won't push you harder, but fair to say you sold less than 10% of the business in that round.
Around, yeah, definitely.
Okay, fair enough. Okay, so first customers back in 2020. Do you remember who it was? How did you land that first customer?
I think ours was typically the first customer was one of the largest, I would say, news reading apps across India. It's by the name of InShots. That's basically one of the news reading apps here in India, right? So we landed our first customer, I think, through references only. We connected. I did a lot of networking across different founders, right? And we got into to their CTO, etc. He liked the product and things like that, and that's where I think like things went. And then I think so far all the customers that we have got are through basically organic ways only, that our customers refer us to basically another customers, and that's all kind of like we've basically like acquired customers so far. Yeah.
So from one customer in 2020 to how many customers are using you now today?
I think around 10 at this point in time, that we have like current customers. Yeah.
Okay, got it. I mean, so can I take 10 times $40,000 ACV? I mean, you guys are doing about $400,000 a year in revenue right now.
Roughly around the same. Yeah.
So why take capital? Why can't you fund yourself from that revenue?
It's growth actually. I think so. Think from this perspective, right? That like it's about fueling it, the momentum of the growth, right? We knew, I think, at some point in time, right, that we need to basically invest more in our R&D at a faster pace to roll out basically things to acquire customers even more, right? At a faster pace, in fact. So like initially, our sales cycle was basically that we were going from one customer to another, right? That okay, until we basically reach a product market fit, we have to kind of like really follow the cycle, because we, with the revenue that we get, we like fuel our R&D, etc., right? But of course, we.
But how big, Aayush? How much R&D are you spending? Like how big is your team today, and how many are engineers?
I think currently we are like 20 people in total of the company, amongst which I think we are half the company is basically R&D at this point in time. Yeah.
I see. And which part of India are you based in?
I think we are currently based out of in Delhi NCR, like Noida to be very specific. Yeah.
Are you seeing more and more competition from just other software companies hiring in Delhi and Pune and Chennai and Bangalore?
Yeah, of course. I think that's there. Given that I think India is a booming market in terms of startups also as well, right? More and more startups are like really coming. So talent acquisition is definitely one big of a problem that we definitely focus like our experience. Given that we are also a young startup yeah, so definitely it's a challenge for us right now. Yeah.
And help me understand a little bit about growth. If you're doing 30 or 35,000 bucks a month today in revenue, where were you exactly a year ago? Do you remember?
I think a year ago we were somewhere. I think in the I would say lower brackets of $16,000 to $20,000 annual, somewhere I think around that. Yeah.
So nice growth. Congratulate, maybe doubling year over year, which is nice. Yeah. What's the plan moving forward? You just raised this capital. What are you going to spend it on? More R&D hires?
More R&D, definitely. I think and our target is to basically kind of see that how we can basically quickly scale up our basically revenues and even like achieve more, I would say, growth in terms of our revenues, right? And of course, I think R&D is a primary focus at this point in time to kind of like really nail down upon the product. And the features kind of like which are like really working well for the customers, like even more investing in that, etc., discovering the newer problems, things like that. But I think more or less R&D only. Yeah.
And Ayush, a lot of first-time SaaS founders, or even second and third time, have a lot of trouble signing enterprise deals right out of the gate. You've got 10 customers paying on average 40 grand a year. How did you convince them that it was worth spending 40 grand a year on your brand new startup?
I think our customer obsession has kind of like really led us to do so, right? I think one of the things that differentiates us basically, I think strongly with respect to our competitors, in the market is that we do anything and everything that basically that customers, especially when we are at this stage, right? That I think our inability to say no to a customer's demand is basically like given us basically a very favorable like advantage that the things that basically let's say our competitors weren't willing to kind of like offer to our customers, in terms of a product feature, service, etc. Right? I think we said yes to almost everything, and I think that's where we've been able to kind of like really convince most of the people that it's worth kind of like doing business with us because we could basically go to like solving customers' problem to the levels that I think we couldn't have like really imagined like so far, right? So I think that's I would say the primary thing that we have been able to kind of like really help like do so. That's why customers like really love us for that reason.
Very cool. Let's wrap up here with the famous five. Ayush, number one, favorite business book.
I would say no. I would say favorite business book, The Hard Thing About Hard Things. Yeah.
Number two, is there a CEO you're following or studying?
No, not really. I think at this point in time, yeah, I do not idolize anybody, but yeah, there are like a number of people whom I could idolize, but I couldn't name any specific.
Number three, what's your favorite online tool for building OpsLift?
Online tool for what?
It's just your favorite online tool, one you use a lot.
I think favorite online tool at this point in time for me would be Twitter. I would say, that's where I spend most of my time on. Yeah.
Number four, how many hours of sleep do you get every night?
Hours of sleep. I think I at this point in time 5 or 6 maybe. Yeah, that's
okay. Not bad. And what's your situation? Married, single, kids?
I am single right now.
Okay, no kids. And how old are you?
At this point in time, I'm 27 years old.
27. Last question. Something you wish you knew when you were 20.
When I was 20, I think at that point in time, coming from basically the roots of India, I think I wish I had known, to like really also explore, I would say, things outside my academic constructs. I was really focused on basically securing, a good amount of grades, etc. But yeah, I think had I basically been more open-minded, or that exposure would have been basically given to me to like really explore things outside my academic books, etc. That would have been like really fruitful. Yeah.
Guys, there you have it. OpsLift launched back in 2020 to help you manage your cloud spend and your cloud setup. They've got 10 customers paying on average $40,000 a year today, so about $35,000 a month in revenue, up from $16,000 a month just a year ago. So nice growth. They just raised a $500,000 pre-seed round, and were able to do it by selling less than 10% of their business, which is great. Good economics there. 20 folks on the team, 10 engineers as they look to continue developing product. Ayush, thank you for taking us to the top.
Yeah, thank you, Nitin. This was like really helpful. Yeah, bye-bye.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.